on the Daily Drive. Property Fast Track with Charles Tarbey. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Nick Bennett tonight. Mieke Buchan here for Kaylee Harris and Charles Tarbey. Welcome for this Monday.
Thank you very much, Nick. Mieke.
Hello.
So here we go. All sorts of real estate discussion coming your way. If you want to pick Charles' brains, he's got 45.3 years experience in the real estate game now. It's increasing by a week every week, of course. It
is. It's 40 years this month since I opened my first real estate office.
40?
Wow.
Yes. No, that's since I opened my first office, Nick. So
Right.
I wasn't in.
So you had a couple of years to season up.
I had a few years
before.
to season up, and then opened my first real estate office. And I think I've told you this. I lived by the philosophy that anything is possible when you don't know what you're doing. Because if I knew what I was doing, I'd have talked myself out of it.
That's very true. I love that because it's like you're living with a glass ceiling, but you can smash through it at any point in time. You can see through the ceiling, but it doesn't have to stop you.
There's something special about having experiences that don't kill you. There's a lot of people that overanalyze and, as you know, underact, and subsequently they don't have the opportunity to have experiences that can be something that will strengthen the way they do things in years to come. You don't even know which way it comes out, but it does happen. So.
This is really excellent advice, actually. You know, whether you want to take it on board as real estate advice or not, it's just good guide to life stuff, because I think these days we are so easily educated via Google and apps and facts and figures and stats that are tossed at us hourly that you can cripple yourself with over-information.
You absolutely won't do anything. I mean, my best motivation was my competitors, because as a young man at 21, 22 years of age, the last thing they wanted to see was me succeed. And so they would consistently give me every reason to get up in the morning and get fired up because they were so negative about what I was doing. And it just changes the way you do things. I do really think that if you don't have those experiences, you really don't get the opportunity later on in life, when you take on bigger and better things, to be able to understand them and effectively drive them through.
And I've had a recent conversation with friends about, as you were saying, Nick, about workshopping everything. People over-research and over-analyse, and they go to Dr. Google and they read everything that they need to know. Yep. So they basically research themselves into a pit of inactivity. and basically,
so true.
But while they're analysing and having workshops with their partners and friends about whether they should make a decision, I'm more of a, jump off the cliff and build your wings on the way down and see what happens. And I've done 10 things while they're still workshopping the first thing. And that doesn't mean I'm doing it right. God knows it means I make more mistakes, but I'm having more fun.
Yes, you're absolutely right. But I mean, people tiptoe through life in order to make it safely to death. And I just wonder.
Put that on a T-shirt.
I just wonder why that people say, "Oh, don't do this, don't do that. You shouldn't do this." I mean, when I bought Century 21 Australasia off the US parent and brought it back to 100% ownership here in Australia, so many people tried to talk me out of it, and it was my daughter that convinced me to stay in it. And I couldn't believe that 11-year-old girl who'd been around my business saw it when the industry said, "Don't do it. It's this, it's that. It's had troubles. It's got problems." My daughter looked at me one day and said, "Do it, Dad." I said, "Why?" She said, "Well, combined real estate, my previous companies like Australian Wonderland, lots of people know it, but to me, Century 21 is like Disneyland. Everybody knows it." And there you are. She saw it from a consumer perspective when everybody else in the industry was telling me from an industry perspective. So there's always so many ways to look at the same thing.
Because they knew you were going to rule.
Oh, yeah, sure.
Out of the mouths of babes. Tiptoe through life on the way to death.
In order to make it safely to death.
Try to avoid that. 13 12 83. Charles Tarbey tonight, sharing some wisdom about real estate, whether it's commercial or resi, maybe you're renting, whatever it might be. If we can help you out, Charles is here to assist. Now, should you avoid selling on a long weekend, Charles? What would stats say? And we'll go into more details soon with Tom Panos, our auctioneer, later in the show.
Okay, yeah.
But what do you reckon? Is it okay to do that on the weekend?
When I was a young guy running my business and I didn't have anywhere to be, your Christmas days or whatever else, I would eventually end up sitting in the office just doing bookwork, and I always kept the door slightly ajar. It was really amazing how many people would push the door and go, "Anybody there?" And I go, "Oh, yeah, come on in." And before you knew it, because people who are really serious about buying or selling are there 24/7. And I think if you go away on a long weekend and you're the only one, there are other people, the only ones at the auction, you're going to have a better opportunity because you're not going to have as much competition.
So as a buyer, it's actually not a bad idea. As a seller, probably not as much because you're not going to have as much competition.
Not as many. But the other thing too, it's the same as when people say, "Oh, look, it's raining, I'm not going to go out." Well, gee, that's the best time to go and look at a property because you find out what's really wrong with it. So a lot of times it's the opposite. It's the opposite.
Yeah.
13 12 83. Charles is here tonight to help you. Now let's talk about this one. Are divisive rooms? Now unpack divisive rooms. That's something that I might be in love with. It might have purple walls and a black ceiling, but someone who really appreciates house presentation would walk in and say, Mr. Bennett, if you have any hope of selling this home, you need to get rid of the purple walls and the black ceiling. So I'm saying this because a Richmond fan, a Tigers fan, is refusing to repaint the man cave of his house he's selling, which is decorated in club colours. So, I mean, it could go either way. If you're a Richmond fan and you buy the house, you'd be over the moon. But if you don't like Richmond,
Exactly.
what do you think about divisive room colours?
Well, I've seen so many different properties that have had very unique tastes, and it's extremely difficult as a real estate agent when you go into somebody's property when they've done all of these things and they're full of admiration for their work. It's incredibly hard to say to them, hey, it's just not going to happen. We had a situation, I think it was young Andrew here, he said he went to an open for inspection and there was a room where there were snakes in well, I don't know what you put snakes in.
An aquarium, probably.
Probably.
Yeah.
And, of course, his wife wouldn't go in that room. And I thought, now, why would the owner of a property do something like that? And I thought, hang on, it's the tenant. There you go.
Wow.
Now,
Right.
I think we've just given tenants some tricks on how to stop people
How to stop
through their
how to
property.
guarantee no sale.
I should not. Okay, all right. I think,
Oh, a good way to guard your man cave. Oh, honey, you hate snakes. Oh, well.
yes. Yeah, there you go.
Generally, though, you want to present a house that has very few negative factors. So
It
we
is-
see a lot of
it is white,
beige,
yeah.
a lot of antique white, a lot of off-white, and not very bold colours because they're not for everybody.
You look at all the people who style properties, they style them for the masses, not the minorities, and that's just the way it's got to be. And so that particular person, they probably, and people are pretty serious about their football, as you can tell from what's happened over the weekend. And some people go, I'm not going in that bloody room, that's, so out. And it's really crazy. It is crazy.
One of my favourite stories from just going into the weekend was from the grand final parade. And Dustin Martin, who's a Richmond Tigers player, a massive mural has been painted on the side of a house in Richmond.
Really?
That obviously the owner of that house is a big fan of his. But in terms of selling it, it's become an icon. And people that were going to the grand final parade were lining up to have a selfie with the Dustin Martin mural. But if you want to go sell that house, I mean, you would assume someone moving to Richmond might have some affection for the Tigers, but you might have to paint that over.
There are plenty of other teams in Melbourne, aren't there?
Oh, there's
Yes,
plenty.
Okay, well, I think you might be limiting yourself there somehow.
Property Fast Track tonight it is, and we are joined by Tom Panos. We always do this with Tom on a Monday night. He's an auctioneer and a 2-decade veteran of the biz. Tom knows his stuff. G'day, Tom.
Good evening. How's everyone?
Mate, we're good, and welcome to Property Fast Track. Let's start out with Sydney. The clearance rate down to 65%, 66 here about. Charles and I are going a bit argy-bargy on the true figures.
69.1 from my side, but look, you go with it, Nick.
69%. Is that because of school holidays?
I think it's a case of school holidays. I think it's a case of long weekend. I think if you actually look at the volumes of properties that went to auction in Sydney on Saturday, I haven't got the exact numbers in front of me, but I'm going to have a prediction and say it would have been less than half of the previous week.
I got 669 here. How does that sound?
Well, it's close.
Yeah?
Yeah, it's close, but it's not.
So the-
No, what is it?
No, we're going to have we have a little bit. 597.
Okay.
Now, what about Melbourne? You think about how many auctions went to Melbourne, Tom?
Well, Melbourne, don't read anything into
No,
Melbourne
because their clearance rate was 89.4%, but there was a very good reason.
Yeah, there's a very good reason. As they say, when the sample size is one, the stats don't matter. I don't know how many there was on
118, but you talk about when the stats are 100%. The winning part of the country, there was a clearance rate of 100% on the weekend. I've never seen it before. It was in Tasmania, Tom.
How many properties?
One.
One from one. Classic. You can't get any better than that. Good outcome.
Winners agreement. Look, I took the weekend. I took the weekend off because of the lower stock levels, and I was in Noosa, and I've got to tell you, it's a time where agents on the Sunshine Coast take advantage of having, I must say, a lot of people from Melbourne in Noosa over the last few days, and they do take advantage. These coastal areas take advantage of people that are holidaying in those areas. I'm in Byron Bay as I speak to you tonight. The same is here. There's not a room available in the heart of Byron Bay. So I think if you're a person that's following the real estate market, this is not the week that you actually include in your sample size. I'm going to stick to what I was saying, and I'm saying that October, November, we're going to increasingly see clearance rates drop. I think Melbourne is going to be the one marketplace that I think will stay resilient. I'm just seeing, Charles, I don't know what your franchisees are telling you, but it's so much harder to put deals together now. And I don't think they're reflected in the clearance rates because, as I've said before, clearance rates are an interesting number. Clearance rate does not tell you that there was 8 or 10 people fighting over that property. Clearance rates don't tell you whether it's sold for $200,000 over reserve. Clearance rates don't tell you whether the owners dropped $100,000 on the Saturday to get their property sold. All they'll say to you is that between the buyer and seller, between argy-bargy, they got a deal together.
Yep.
And that doesn't tell you the exact story on the health of the real estate market.
Yeah.
Interesting stuff. Good perception. Now, you're in Noosa, just north of Brisbane. How did it go over the weekend?
Okay, so Noosa, real estate agents have boards up everywhere because they're trying to take advantage of people walking around Hastings Street and, they go for what we call that emotionally connected buyer that goes along, is relaxed for 2 nights, they've slept really well, they start reevaluating their life and they say, you know what, maybe I should do this, maybe I should do that. Next thing you know is they've got an offer and acceptance on a property. Most of these stories don't end up, they end up in tears about 5 years later.
We have up on the Sunshine Coast 7 locations, Tom, from Caloundra all the way up through Noosa, and those guys are just absolutely flat out. We've called the Sunshine Coast as the place to be for quite some time, and I dare say it's going to continue to grow.
A lot of Century 21 signed boards up there, I noticed, Charles. It must be a very strong office, the one not too far away from Hastings Street.
There's a few, there's a few of them around there all the way in those locations. All good, Tom?
Good to talk to you,
good.
Tom, and enjoy Noosa. Who wouldn't?
Thank you so much.
Good on you. Tom Panos, he's a fantastic auctioneer, joins us every Monday night on Property Fast Track with Charles Tarbey, and Jane's called in, 13 12 83. Have you got a question for Charles?
Hello.
Hi, Jane. What's your question for Charles?
I'm just wondering, what's your take on a auction? How is going an auction on a long weekend?
Yeah, we were just talking about that actually, Jane. I guess there's a few things that I'd say to you. Whereabouts it is really important, because if it's a great property in an area where there's hardly any supply, it wouldn't matter what weekend you auctioned the property for sale. So that's the first thing I'd say to you. If it was in an area where there are a lot of properties for sale, I would have a tendency to sit back and wait for the right time for people to start coming out. So it really is dependent upon those two things before I'd make a decision on auction on long weekends, Jane.
Oh, okay. What about Melbourne? In Melbourne itself?
Well, you see, Melbourne's one of the strongest auction capitals in the country, and last week they auctioned 1,359 properties. This week they auctioned 118. So I guess that gives you an indication that a lot of people either just don't care about real estate on the weekend, and I know they don't when football and Melbourne Cup's around. So I'd say that Melbourne's a good indication for you as to why you should probably wait.
Okay.
Thanks for your call, Jane.
Thank you, Jane.
Can I ask one more question,
Yeah.
please? Oh, sorry. I'm just wondering, we're trying to buy a property back in Melbourne again, but it's an apartment. It's going to be like a boutique apartment. Do you think it's a wise one to do, or do you think it's a better one to do it down in Brisbane?
Are you talking about an apartment for investment or apartment to live in?
Investment.
Yeah, look, what's happening in Brisbane is a very interesting place right now with apartments. There's a significant number of areas in the Brisbane marketplace outside of the city. Some of the city ones are doing fantastically, but just as you start to nudge out of the city, West End, those areas, the apartment off the plan are struggling, and there are issues there as to whether or not people will be able to settle or whether they will care about settling, because the banks will revalue those properties prior to settlement, and we're not sure, quite a few of us are not sure, that the valuations are going to stack up. That would indicate to me that there might be some better opportunity in Brisbane than there might be in Melbourne.
Oh, okay. All righty.
Thanks for your call, Jane. I hope that helped. 13 12 83.
Thanks,
Charles
Jane.
Tarbey tonight with Property Fast Track as we go around the grounds, thanks to Century 21's extensive national network of estate agents. And tonight, Terry Tallentire from C21 North Sydney.
Yeah, great. It's great to have Terry on the show because Terry's quite an expert in that area, and that's a very specialised area where it becomes when you've got rental properties as well as properties for sale, and it's one of those areas that's in such high demand. And Terry's been an established real estate practitioner there for a long time. Terry, why do you? I know I'm asking the obvious here, but why do you want to list and sell and manage property in North Shore of Sydney?
Oh, Charles, exceptional place. The Lower North Shore is one of the meccas of Australia, and especially of Sydney. So it's plus a beautiful place. So who wouldn't want to practice real estate on the Lower North Shore in North Sydney?
My daughter lives in Wollstonecraft. She bought an apartment there about 1.5 years ago, and she just absolutely loves how she can walk down to, I think it's Waverton train station, or she can walk across the road to a massive park, or walk up the road to Crow's Nest, to restaurants. That's the sort of lifestyle you're referring to?
Absolutely, yes. We're very, very blessed. It's all within a short distance, either by public transport, walking, or quite easily get to by car as well, Charles.
We keep hearing how expensive Sydney is. I sold an apartment in the middle of the city at the end of last year and have not bought again. So where is the value?
Look, there's value throughout, and it really depends on predominantly the type of property that you're looking for, Mecca. The Lower North Shore has been continually rising, and I believe we're going to see that for quite some time. This last month alone, we've seen 84 properties sold under the hammer. So there's still strong growth there, and still a lot of demand. I believe there's still good value in the older style Art Deco property if you could look to acquire that at a reasonable price. Something that's probably not had any work done on it. This is where you'll pick up good value. And that would be in the Wollstonecraft area, I believe.
I'll make sure I tell my daughter, Terry.
Yes. You'd be very happy to hear that 13.3% on the for per annum for Waverton, the growth there,
yeah.
Charles. It's been exceptional.
I'm very pleased. She loves living, and I think that's probably the most important thing, isn't it, Terry? It's you don't ever want to sell where you love living. Yeah?
Exactly right.
Thanks for your time, Terry Tallentire.
Thank you very much, Terry.
Century 21 North Sydney. Appreciate it here tonight. Charles Tarbey, 13 12 83 if you want to speak to him and get some property advice, or you can email us, message us at talkinglifestyle.com.au. Now, Sydney property prices slid for the first time in 17 months. We'll find out why in just a minute with Tim Lawless.
Talking lifestyle, we're talking about it.
Property Fast Track tonight it is. Mieke Buchan's here for Kaylee Harris. Nick Bennett's my name, and Charles Tarbey here to take your calls if you've got anything you want to run by him when it comes to real estate. 13 12 83. September housing data has been released from CoreLogic, and the main markets are officially cooling. Sydney prices dropped fractionally. Melbourne prices, slower growth. Let's take a look at this stuff a little closer with Tim Lawless, the Director of Research at CoreLogic. G'day, Tim.
G'day, Charles. Good evening.
Tim, you've got Nick, and we found out her name is not Mieke and it's Mecca.
I'll take Mecca all day.
Take Mecca all day.
I'll be the Mecca.
Yeah. Tim, you and I have spoken way too much in the last few weeks. Tim was on Sky Business as my guest recently. Spoke to him today. Spoke to him last week. He's been helping with data, and here he is again, the man that's got all the numbers.
Tim, why did Sydney lose value?
Well, it's probably been a long time coming, to be honest with you, Charles. It's after 5.5 years of quite solid capital gains. So we've seen Sydney dwelling values are up about 75% the last 5 years. So to see them slip backwards by 0.1% over a month is really quite it's insignificant in the grand scheme of things.
It is a 0.1%. I mean, that's just a splot, isn't it? Really, is it significant?
Is that a technical term?
or is it just a little glitch?
It's virtually a steady market, to be honest with you, and it's probably the first sign though that we are potentially going to see some further downwards movements in the Sydney marketplace, which is normal after such a strong growth cycle.
It is
really what we should expect.
It is normal. It's what we've been calling. We've been suggesting that this year might be one of those years where we start to get some balance and we get steady growth. And steady growth's great because, as we always say, a boom is a real disruption to not just the community, real estate practitioners. Everybody thinks the agents make a fortune during the boom, but it's the worst time because there's no property for sale and everybody's fighting for a property to put on the market. So So the marketplace that's in Perth or in Darwin is more real estate than what we've had in Sydney. That's what I would call real estate, Perth and Darwin.
Yeah, and if you start looking at the listing numbers in the Sydney market, the last 5 years, they've been tracking at absolutely record lows. So there's been very little stock in the market, which means that's one of the real reasons for upwards pressure is this whole FOMO thing that people talk about, the fear of missing out. So now that we've seen the last 12 months, compared to a 12-month period a year ago, we've seen listing numbers are up by about 15% in Sydney. So there's more options, there's more choice for buyers, which means buyers are getting a little bit more leverage back in the marketplace as well.
So when you say FOMO, are you referring to vendors or to those buying in? Because it could go either way. Fear of missing out on a great big cash in and a realisation, or fear of missing out and getting in?
I think that's one of the reasons why we have seen listings tracking quite low, is because vendors do feel a little bit spooked by the rate of capital gains. And a lot of them feel if they put their property in the market now and they want to upgrade, potentially between the time of selling and between them buying, prices may have moved upwards again. They could be priced out of the market. So I think it really does go both ways.
Yeah, what's going on in Melbourne?
Yeah.
Well, Melbourne's been a really resilient market. You think of Sydney going through very strong capital gains, which it has. Melbourne's been almost as strong. We've seen values rise by about 65% the last 5 years. But they're still quite strong. We've seen values rise a further nearly 1% over the month. They're up about 12% over the past 12 months. And you can see that in a whole bunch of other factors. Clearance rates generally still above 70%. We're seeing transaction numbers holding strong. Properties on private treaty still selling in about 30 days as well. So it looks like Melbourne isn't showing quite the same level of slowdown as what Sydney is.
The vacancy rates in Melbourne, Tim, as you know, I love talking about that one. It's a very exciting number for me. Last week, it's been under 1. 0.93% was the last count, I think, somewhere there. And Sydney has been higher. So even in that area where the investors are, the tenants are still struggling to find property to rent.
And that's starting to push rents up finally as well. We're starting to see some rental pressure, which hopefully is going to start to reverse the yield profile, because Melbourne is showing the lowest yield of any capital city, just below 3%.
And that pushes to Hobart, because we were talking about Hobart, how well that's gone. And 2 weeks in a row, Hobart has increased 2.39% 2 weeks ago, and it was just over 1.3% last week in increase in rents. So all of a sudden, Hobart's copping it even more than people would have expected.
Yeah, Hobart's looking really strong, and it's got a really balanced growth profile as well. It's got strong capital gains, up a little bit more than 14% the last 12 months, but it's also got one of the highest yield profiles of any capital city, with the yields tracking a little bit above 5% on a gross basis. So that total return is just a little bit over 20% when you combine the capital growth with the gross yield.
Tim Lawless is here tonight from CoreLogic. Mate, I heard you say earlier today that you view Hobart now as being a lifestyle destination, and those prices pushed up by maybe baby boomers getting out of your Sydneys, your Melbournes, your Brisbanes. Is that fair to say?
Yeah, I think that's part of it. And I know there is an economy in Hobart, so don't get me wrong, there is jobs there to be had, and young families are moving there as well. But I think we are seeing a lot of people from Sydney and Melbourne utilising their equity, keeping in mind they've seen a lot of wealth creation in those two markets, and we're seeing some of that equity being unlocked or even cashed out, and people buying into lifestyle markets, not just Tassie, but also think of the Sunshine Coast or the Gold Coast or Byron. All those lifestyle markets are really showing quite a strong upwards trajectory now.
Now, we were talking about Brisbane earlier, and Charles was saying that's the best place to put some investment money. I don't want to spend $1 million, maybe something south of that.
Yeah, not yet. It's not yet the place. It's getting there, isn't it?
Where are you seeing the trend that things could be going down and becoming more affordable? Because we're hearing about everything going up or holding steady.
Yeah, so, I mean, Brisbane, or the whole of southeast Queensland, I think looks really, really quite solid to me. You can buy a detached house in Brisbane generally for under $550,000. The median value is about $530,000. Sure, there's some problems around the inner city unit market, which I think you need to be a little bit cautious around. But other markets like Perth is a really good example where we have seen quite a substantial downturn in the market, and there's increasing evidence now that market's probably moving through the bottom of its cycle. So some really good buying opportunities in that market now that values are down 11% since they peaked. And also look at somewhere like Canberra, where values are really accelerating. We're seeing very strong capital gains in the Canberra marketplace, very similar to Hobart as well.
But then you have to live there.
Yeah, no, just invest there, Mieke.
Sorry.
Just invest there.
Just visit.
Just visit. I'm still shocked, Tim, with Brisbane because I keep looking at it, and people have said that I've predicted Brisbane. I haven't. I've predicted Melbourne and Canberra as my two best locations and the Sunshine Coast over the last year. What surprised me is that Brisbane, unlike Perth or Adelaide, which have struggled, or the Northern Territory, which have struggled with mining, and Adelaide through different issues regarding their economy. The Brisbane market, it has economic issues, but its growth has been nowhere near that of the other capital cities of Sydney and Melbourne. And there's always that expectation when something happens in Melbourne or Sydney, the next place is Brisbane. And it hasn't really gone the way everybody's expected.
No, not at all. If you look at the last 5 years in Brisbane, the annual rate of growth is a little bit less than 4%, so 3.7% per annum. Over the past 10 years, this is over the past decade, values only increased by a little bit less than 2% per annum, less than inflation. So this is a marketplace that's been doing virtually nothing for really since 2007. So it is time for the Brisbane market to start responding. Jobs growth is ramping up now, migration rates ramping up into southeast Queensland. So it looks like there's a few more drivers now that should start to push prices higher.
Well, Tim, thank you very much. We don't want to hold you up because we know you have so many media commitments tonight, which I'll talk to you about another time.
Thank you, Tim.
Thanks, Tim.
Tim Lawless, CoreLogic Head of Research. Appreciate your time on Property Fast Track tonight for Charles Tarbey, 13 12 83. Maybe squeeze a quick call in before Charles go. So I got a quick question for you.
Okay.
So let's say people want to get into the new economy, the app economy. I'm talking about Airbnb.
Oh, right.
Is that a good reason to buy yourself an investment property if you can channel some Airbnb business through it? Are people doing that now? Are you seeing that?
Yeah, I'm seeing a lot of it. I'm also seeing a lot of it with personal homes where people need that extra income. I've seen quite a lot of that. And I think it's going to be hard for the government to track that situation because sometimes your Airbnb might be, I'm going to be there for 3 days and that's all recorded and that's all done, and then 3 months later you're still there. And I just wonder whether there's going to be a cash economy that comes out of that side of the marketplace and is going to be looked at. But I find it dangerous to some degree as well. And I know it's disruptive to a lot of apartment dwellers. There's a lot of concern there about short-term rentals. They can be a disaster. But if people can earn extra revenue through different sources, I think that's their opportunity.
Charles, thanks for your time. We can catch you tonight on Sky News.
Thanks, Nick. Yes, you can.
Beautiful. And what's that channel? What's Sky News channel
602.
Number? 602. Thank you. See you then with Tom Panos as well. Charles Tarbey returning with Property Fast Track next Monday. Appreciate it, mate.
Tap.